Welcome back to the show. Today's episode is inspired by a video title so many of you loved, 7 Money Habits That Made Me Rich. I thought, why not turn it into a deep dive conversation? So I invited someone who's actually lived it. He's an entrepreneur, investor, and self-proclaimed spreadsheet nerd who went from overdraft fees to a 7-figure net worth. Alex, welcome.
Thanks for having me, Mia. I'm excited to dig in. I brought the receipts, literally and figuratively.
Perfect. Before we jump in, quick disclaimer. We're sharing experiences and education. This is not financial advice. Okay, let's go. Habit number 1.
Habit number 1, pay yourself first and automate it. This single habit changed everything for me.
Classic for a reason. What did that actually look like in your life?
I used to do what most people do. Get paid, pay bills, swipe the card, save whatever's left, which was usually nothing. So I flipped it. The day my paycheck hit, I had automatic transfers set to move money into my investments and savings before I saw it in checking. I started small, $50 per paycheck, then increased it every quarter. I also set up my 401k contribution to hit immediately, so it never even touched my checking account.
So you never let your brain argue with the plan?
Exactly. No willpower required. Over 2 years, I went from saving 3% to 40% of my income. I did it gradually. Every time I got a raise, I increased my automated savings before I upgraded anything in my lifestyle.
People are thinking, but I'm paycheck to paycheck. What do I automate? What's your advice there?
Start with something laughably small, $5 or $10. The amount matters less than the identity shift. I'm someone who invests every time I get paid. Then create a staircase. For example, set a calendar reminder for every 90 days. Increase your auto transfer by $10 or 1%. It's painless and it compounds. Also funnel any windfalls, tax refunds, bonuses, side income straight into your investments at a higher percentage. I did 70% of all unexpected money into investments for years.
Where was the money going mechanically?
3 buckets. 1, retirement accounts, 401k, IRA, pre-tax when possible. 2, a taxable brokerage account for index funds. 3, an emergency fund until it hits 6 months' expenses. All automated. I set the dates so money moved the morning I got paid. That way my checking account showed my true spendable money.
Okay, that's habit 1. What's habit 2?
Habit number 2, track what you value. Not every penny, but do it consistently. I call it a 1-page personal P&L, profit and loss, once a week.
P&L for your life. I love that.
Sunday nights, 20 minutes. I open my bank and credit cards, and I categorize spending into 5 buckets: housing, transportation, food, fun, and everything else. I'm not trying to shame myself, I'm trying to observe patterns. Then I ask, did my spending match my values? I love great coffee and travel, so I'm okay spending there. But I cut ruthlessly on things I don't care about, like I downgraded my internet plan when I realized I was paying for speed I didn't use.
So not a restrictive budget, a conscious one.
Exactly. I also use a 30-day list for non-essentials over $100. If I still want it in 30 days, I buy it. That alone slashed impulse buys by half. And once a month, I do a subscription amnesty. Open the App Store, PayPal, and card statements, and cancel anything I forgot I had. That's paid for multiple vacations, no joke.
For someone who hates budgeting, what's the minimum viable version?
Minimum viable is a weekly money date. Check your balances, move money where it needs to go, and ask 2 questions. What felt worth it? What felt wasteful? Then make 1 adjustment. That single habit compounds into awareness, which turns into better decisions.
Habit number 3?
Habit number 3, grow your income deliberately. Offense beats defense.
Tell us how you did that.
I treated raises like a project. Every 6 months, I documented my wins, revenue I brought in, costs I reduced, projects I shipped. I put it into a 1-page impact doc and sent it to my manager before review time. Here's what we agreed on. Here's what I delivered. Here's the business impact. Then I made a specific ask. Based on market data and my results, I'm asking for an 18% adjustment.
Did you actually say 18%?
I did. Anchoring matters. You'll be surprised how often the answer is yes when you're prepared. The first time I did this, I got a 12% raise plus a title bump. I also learned to negotiate offers. Always ask, is there flexibility on base, bonus, or equity? Many times the answer was, we can't move base much, but we can add a sign-on or equity. That's free money for asking a respectful question.
For folks not in corporate, what about entrepreneurs and freelancers?
Productize your service. Don't sell hours, sell outcomes. Create packages, raise prices for new clients, and build a lead pipeline you own. Email list, content, referrals, so you're not dependent on a platform. I also stacked skills that multiply, like basic sales, copywriting, data analysis. Not expert level, just competent. That made me way more valuable and let me charge more. And here's the key. I invested 50 to 70% of every income increase. That locked in wealth building and prevented lifestyle creep.
Okay, habit number 4.
Habit number 4, buy assets every month. Non-negotiable. For me, that meant index funds first, then real estate, and later a small bucket for higher risk bets.
Let's unpack index funds.
Dollar cost average into broad market index funds. Buy at regular intervals regardless of price. For years, I put money into a total market fund and let it ride. I reinvested dividends automatically. I didn't chase hot stocks. I didn't time the market. During downturns, I increased contributions if I could. That was the engine.
And real estate?
I did a house hack first. Bought a duplex, lived in one unit, rented the other. The rent covered most of my mortgage. I chose a boring property in a decent neighborhood near jobs and transit. I had reserves for maintenance and vacancies. After a couple of years, I refinanced, pulled some equity, and bought a second rental. I underwrote conservatively. If the deal only worked in a perfect scenario, I walked away.
And the small bucket for risk?
I set aside 5 to 10% of my portfolio for asymmetric bets, like a small angel investment, a speculative stock, or a business idea. It kept me engaged and curious without risking the core. If those bets paid off, great. If not, my core compounding engine kept chugging.
People get scared when the market drops. How did you keep buying?
I decided my time in the market would be decades, not weeks. I wrote a simple investment policy for myself. I buy every 2 weeks, I don't sell because of headlines, I rebalance annually. When the market tanked in 2020, I stuck to it. Emotionally, it's tough. Mechanically, it's easy. Automation saved me from myself.
Habit number 5.
Habit number 5, protect the downside. Avoid bad debt, build an emergency fund, and use insurance correctly.
That's the unsexy stuff that keeps people in the game.
Totally. Early on, I carried credit card balances, dumb and expensive. I attacked them with a hybrid method, paid off the highest interest card first, but sprinkled in a small balance I could kill quickly for momentum. Then I set all cards to auto-pay in full, forever. I keep utilization under 10% and I don't chase points if it means overspending.
And the emergency fund.
3 to 6 months of expenses in a high-yield savings account. When I was starting out, I aimed for $1,000 fast, then 1 month, then 3. That gap between life happened and I'm okay is priceless. Add proper insurance, health, disability, renters or homeowners, and liability coverage. Insurance is boring until it saves your life.
Any rules of thumb for cars, student loans, mortgages?
Cars, buy used, reliable, and keep it for years. Student loans, refinance if it reduces interest and doesn't compromise federal protections you need. Mortgages, buy well below what you're approved for and assume expenses will be higher than you think. The less your fixed costs, the more freedom you have.
Habit number 6?
Habit number 6, build a system so you don't rely on motivation.
Meaning?
Default decisions. I set up separate accounts, one for bills, one for daily spending, one for investments. Paycheck lands, money flows automatically. I have a fun money card with a weekly allowance. When it's gone, it's gone. For big purchases, I create friction, a 30-day wait list and a conversation with future me. Will I still want this when the novelty fades? I also schedule a weekly money date and a monthly net worth day. On net worth day, I update a simple spreadsheet, assets, liabilities, net worth. Seeing progress, even small, kept me consistent.
Do you schedule audits for things like insurance, phone plans, streaming?
Yes, quarterly, subscription audit, twice a year, insurance and phone plans, annually, investment rebalance and beneficiary checks. I treat it like routine car maintenance. And I have rules, no payday loans, no co-signing, no debt for depreciating toys. Those rules remove a ton of decision fatigue.
Habit number 7, the finale.
Habit number 7, curate your environment and identity. Your money grows fastest when your default settings support it.
I love this already. Go on.
I joined a small accountability group. We shared goals, income targets, and setbacks. No judgment, just data and support. I sought mentors who were where I wanted to be and offered value first. Free research, intros, volunteering, and I had a money meeting with my partner every month to align on goals and spending. We agreed on rules: no purchases over a certain amount without a conversation, invest raises, and plan trips in cash. And I guard my inputs: fewer doomscroll finance hot takes and more long-form books and conversations.
Identity piece.
I stopped saying I'm bad with money and started saying I'm a disciplined investor. That sounds cheesy, but identity drives behavior. I also built a habit of generosity. I set aside a percentage for giving, even when it was small.
I stopped saying I'm bad with money and started saying I'm a disciplined investor. That sounds cheesy, but identity drives behavior. I also built a habit of generosity. I set aside a percentage for giving, even when it was small. It kept me from gripping money too tightly and reminded me why I was building wealth in the first place.
That's a beautiful place to land. But I'm going to put you on the spot. If someone is starting from zero today, what's their 7-day action plan?
Day 1, open a high-yield savings account and move $100. If $100 is too much, move 10. Put something in the I'm safe bucket.
Day 2?
Set up automatic transfers for your next paycheck. X dollars to investments, Y dollars to savings. Pick an amount that feels easy now and schedule a 90-day increase.
Day 3?
Do a subscription audit. Cancel 3 things. You'll survive.
Day 4?
Create your one-page P&L. 5 categories, last 30 days of spending. Pick one tweak for next week.
Day 5?
Ask for a raise prep. Draft your impact stock. List 3 measurable wins and set a meeting to discuss growth.
Day 6?
Open a low-cost brokerage account and set up an automatic buy into a broad index fund, even $25.
Day 7?
Money date with yourself or your partner. Set 3 rules: a spending waitlist, an automation increase schedule, and a fun budget you can enjoy guilt-free.
That is so tactical. Let's rapid fire some FAQs. First, should I invest or pay off debt first?
If it's high-interest debt, like credit cards, attack that first, while putting a tiny amount into investments to keep the habit alive. If it's lower-interest debt, you can do both: pay above the minimum and keep automating investments, but always capture free money, like employer matches.
What if the market crashes after I start investing?
It will, eventually. That's not a bug, it's a feature. If you're investing for decades, crashes are sales. Your job is to keep contributing and not sell out of fear.
Do I need to start a business to get rich?
No. Businesses can accelerate wealth, but a great career plus disciplined investing can absolutely make you rich. The common thread is increasing your value and your investment rate.
And how do you talk about money with a partner without fighting?
Start with values, not numbers. Ask, what does money mean to you? Set shared goals, like a trip, a home, freedom to work less. Agree on rules for big purchases. Have a monthly money date with a glass of wine and a shared Google Sheet. Make it a partnership, not a prosecution.
And how do you avoid lifestyle creep?
Automate raises into investments first, then choose one guilty pleasure per raise. Enjoy it, but keep fixed costs steady for as long as you can.
Let's talk mistakes. What did you get wrong?
Timing the market. I bought a flashy stock in my 20s because a friend bragged. Lost half. I also over-renovated my first rental and spent money I didn't need to. And I waited too long to get disability insurance. Mistakes happen. Having a system made them survivable.
Books or resources that shaped your habits?
The Psychology of Money for Mindset. The Simple Path to Wealth for Index Investing. I Will Teach You to Be Rich for Systems and Automation. And honestly, my own spreadsheet, tracking net worth monthly, changed my life.
If someone hears all this and feels overwhelmed, what's your pep talk?
You don't need to do everything this week. Pick one habit. Make it so small it's impossible to fail. Then protect it with automation and environment. 2 years from now, you'll be unrecognizable, in the best way.
Before we wrap, can you recap the 7 habits in your own words?
Sure. 1. Pay yourself first with automation. 2. Track spending against your values with a weekly money date. 3. Grow your income intentionally. Negotiate, stack skills, raise prices. 4. Buy assets every month. Index funds first, then optional real estate or small bets. 5. Protect the downside. Kill bad debt, build an emergency fund, insure wisely. 6. Build a system. Separate accounts, default decisions, routine audits. 7. Curate your environment and identity. Mentors, accountability, aligned partners, and generosity.
Mic drop. Alex, this was packed. Thank you for bringing both strategy and stories.
Thanks for having me, Mia. If one person sets up their first auto transfer after this, I'll call it a win.
I love that. To everyone listening, pick one habit today. Set it up before the motivation fades. We'll link resources in the show notes. And if you found this helpful, share it with a friend who needs a nudge. Alex, you've been amazing.
Appreciate it. Go build something you're proud of.
That's our show. See you next time.